Hello everyone, my name is Vladislav. I'm a tax attorney and master of tax laws here in the state of Florida. And today we're going to analyze Donald Trump's proposed tax policies and their impact on the United States tax system. And before we dive into the details of the video, I would like to congratulate Donald J. Trump on winning the president election fair and square. I would also like to note the fact that Republicans have maintained their control over the United States Senate and are on track on winning the United States House of Representatives, which creates an interesting alignment in Washington, allowing for President Donald Trump's tax policies to have a smoother ride through the bicameral system and therefore likely to actually be implemented into the United States tax laws. Without further ado, we're going to explore Donald Trump's key tax policies and proposals, and we will analyze what kind of effect they're going to have on the United States economic landscape and United States taxation system. But before we go into the specific details of Donald Trump's proposals, we need to acknowledge the fact that he has actually passed prior tax laws in the United States under the Tax Cuts and Jobs Act of 2017, which came into effect in 2018. Now, the general landscape of what Donald Trump wants to do is to extend these sunset provisions, which are set to expire in 2025. Now, under that particular law, Donald Trump has temporarily lowered the individual income tax rates, expanded the standard deduction, and increased the child tax credits, and limited the certain deductions through 2025. Now, the sunset provisions mean that once the time has lapsed, the prior law and the tax rates will take effect. Thus, the major theme across a lot of his tax policies is actually to make these changes permanent. Thus, for the sake of saving time, we're going to focus on some of the major items of Donald Trump's proposals, which are the following. Number one, it is the Section 1099 pass-through deductions and non-corporate loss limitations. The current landscape is that the deduction allows for pass-through businesses to deduct 20% of their qualified business income. However, that is the type of law that is set to expire in 2025. Thus, making the deduction permanent would provide ongoing tax relief for the businesses supporting entrepreneurs and other non-corporate entities. Next, number two is making the TCJA estate tax changes permanent. As you may know, the TCJA in 2018 has actually raised the estate tax exemption to almost $12 million, and today, which is adjusted for inflation, is at $13.61 million, allowing for larger estates to avoid federal estate taxes, and this is actually also set to revert at the end of 2025. Thus, Donald Trump would make an exemption permanent, further reducing the tax burden on high net worth families at the time of the transfer. This is one of those laws which has to do with what we call death taxes. Thus, a higher exemption is a good thing. Thus, we are waiting for that particular law to be extended, and I almost guarantee you that this is going to be passing. Now, number three, it is restoring the TCJA business tax provisions, which has three main pillars under it, which is the 100% bonus depreciation, where businesses get to take a deduction immediately of 100% of the certain assets they put into service. It is the research and development expensing. The TCJA has allowed businesses to immediately deduct research and development costs, which are also set to expire 2025. And one of the bigger ones is the EBITDA-based interest limitation, which is specifically targeted for the high net worth earners. It limits the interest deductions to 30% of the EBITDA, expiring also in 2025. Now, this particular proposed change that Donald Trump will be bringing in the office is that his plan would make the provision permanent, supporting capital investments and R&D and essential business expansion and innovation. Number four, which is one of the more surprising ones, it is the reinstatement of domestic production activities deduction, the DPAD, at 28.5%. Now, the current landscape is that the deduction, which reduced taxes on domestic manufacturing, was repealed by the TCJA, but Donald Trump has expressed the interest of reinstating it to lower the effective corporate tax rate to 15% for the domestic production, potentially revitalizing the American manufacturing sector. So that is something that can really give a good boost to United States GDP, and that is one of the most awaited policies, at least in my opinion. Now, number five is the exempting tips, social security benefits, and overtime pay from income taxes. This is one of the most interesting proposals that I find from Donald Trump. It is that he's trying to change the whole concept of that the income however derived, is taxable. And in this case, tips, social securities, and overtime are currently subject to income tax, which under his plan would exempt these income types, providing targeted relief, but with limited impact on broader economic growth. Which is interesting because I wonder how they will be statutorily separating tips, social security, and overtime, and how exactly the compliance with that particular type of income will be. It's going to be very hard to really separate tips and overtime in a lot of professions. So that's why I'm eager to really look into the details of what Donald Trump has to propose on this particular law. I'll keep you specifically in the loop when more details come out on this particular matter. Number 6, it is the creation of the itemized deduction for auto loan interest. This can actually help a lot of Americans because the interest on auto loans is currently non-deductible. However, this new deduction would reduce taxable income for individuals with auto loans and benefit particularly the middle income class who have to borrow money in order to purchase vehicles. Now moving to some economic policies which are raising a few eyebrows. It is raising the current Section 301 tariffs on China to 60%. Under the current landscape, we have the tariffs on Chinese goods currently set and weighted average of 10%. Thus, under the Trump's proposal to raise tariffs to 60%, this particular raise is aimed to pressure China on trade, though it may also increase costs to the American businesses and consumers. Thus, there is a few risks with that particular proposal. In-depth research needs to be done on that, and once more information comes out, I'll keep you guys in a loop with the latest details. Next, we have the imposing on the universal tariff on U.S. imports of 20%. Under the current landscape, most U.S. imports are subject to much lower tariffs or they're completely tax-free. Thus, under the universal 20% tariff on all imports, would generate a substantial revenue, but it would also raise consumer prices and invite retaliation from the trade partners. So again, this is one of those proposals which we haven't seen a lot of information on. Thus, once more information comes out, we will give you the update on that. Now let's talk about the foreign retaliation of 10% on all U.S. exports. This one, interestingly, it seems to be offsetting the benefit of the tax reduction that we have seen in the prior proposal, because under the current landscape, the U.S. exports currently face limited tariffs from the certain trading partners or are completely tax-free, and the foreign retaliation of 10% tax rate would essentially hurt U.S. exporters, particularly the sectors like agriculture and manufacturing, offsetting the economic benefits of the tax cuts we discussed earlier. Thus, this particular law, I highly doubt will actually go into the effect because shifting simply the tax rate into the tariff zone would not be beneficial in my opinion. Thus, we'll keep you informed on the developments on this particular matter, and once we have more information, you will know. Now, to summarize the key policies that Donald Trump is bringing to the table is that Donald Trump's proposals aim to foster growth, bring manufacturing back to the United States. However, some of the policies seem to be offsetting the benefits of the tax cuts with the tariffs. Thus, it's very important that we obtain more data on the plan. We need to see something in writing from Donald J. Trump on that particular plan, and we will give you most updated information once that's released. If you have any questions in regards to the current tax situation, tax preparation, tax planning, you're more than welcome to call my phone number. You're more than welcome to visit our website. Please put the thumbs up, subscribe to the channel, share this video with your fellow taxpayers in the United States or abroad. Thank you for watching this video on Donald Trump's key tax policies. I'm your host, Vladislav, tax attorney and master of tax laws, signing off. Have a good day.